Good.
Okay. All right. Welcome members and guests to attend our September Virtual Investment Club meeting. I'm Jay Eagleson, president of the club. So let's start with our disclaimer first. Better Investing is a nonprofit educational organization that teaches individuals and investment clubs how to employ fundamental analysis to become successful long-term investors. Our club is a stock investment club. Our mission is to provide a supportive environment for all members to learn how to research, analyze, and invest in quality growth stocks over a long-term investment horizon. The stocks we present today are for educational purpose only and are not intended to be a recommendation of buying or selling any of the stocks. We ask you to do your own research. So guests, I also want to let you know that for security reasons that we disable all your names, emails on the attendees panel. Because we want to protect your personal information. Also, we muted you. In our previous meetings there was a guest comments portion of the meeting, but we decided to ask for your feedback in a quick short survey. So so this time we were not going to go through individual to ask you verbally to ask you for comments. However, when you exit the meeting, it will prompt you some questions, short questions to, we would like to know what you think about meeting or anything else that we can do better. Of course, during the meeting, if you have any questions, you can type the questions in the chat box. So enjoy the meeting. So next, going through the meeting agenda is Treasurer's Report. Roy?
Okay, thank you. Let me go to that.
Oh, sorry, I need to make a presenter. I just realized that was Bernard's screen. There you go.
Okay.
Okay.
All right. Okay, here is our portfolio. Looking at it with the Morningstar's tool, they have a portfolio service. And we didn't make any purchases last month, although what I did was I went through and added the dividends we received, bought whatever partial shares that would purchase for the stock that issued the dividend. And I believe, as I explained last month in Morningstar, it treats each purchase as a separate transaction. There is an option I could change this and combine them, but I liked being able to look at it and see if it made sense. If one purchase was doing better or worse than another one, we could maybe backtrack and find out why, what was wrong with our thinking, or what was really good about our thinking when we made the purchase. Anyway, we have $13,693.74 according to this portfolio. And the only stocks that we've lost money on is the Bank of Ozarks.
Mm-hmm.
All the others, if you can see under market value, they're all over $1,000. And that's what we purchase. That's our basic purchase price, is $1,000. So we're doing pretty good, some better than others, but then we've held some longer than others. Because we're a model investment club, we also get the iClub portfolio free. So I've created that, and basically it's the same amount. It's 25 cents different in this account or in this portfolio than the Morningstar one, and that is strictly because of rounding. The number of shares, they go into 4 decimal points. where Morningstar stops at 2 and round. So it just throws it off a few cents, but they're basically the same. And you know, I said we didn't purchase anything. What we did is we had voted last time to get rid of
LKQ.
yeah, but also
BIVV
here.
BIVV.
Yeah.
Mm-hmm.
And what I did is I took that money from that and put it back into Biogen because BIVV was a spinoff from Biogen. And
and we got the shares at no cost.
right. So what we have, I put $1,000 in every month, and then if we buy something, then that reduces it. We're off $41.56. That's because the stock we sold, we actually made a little bit of money on. So that's what this, why that's not a round number. But anyway, the club seems to be doing well.
Great. So
Thank you.
I don't know anyone see investor advisors newsletter. BIV was one of they have the stock selection guys at the end of their newsletter to say BIV actually it's a growth company, but we decided to sell because, as Tom mentioned, it doesn't have enough data to support at this point.
Right.
Yeah.
And I forgot to show this. In the iClub program, they have the pie chart, and you can see our stocks are fairly balanced. We go from about 5.4 to 11. IPGP is just really taken off, but other than that, they're all pretty close to the same. The biggest area, this broker, that's cash, and that's because I put $1,000 in, and I did it again today, so we have 5,000 and change sitting there ready to invest. And Morningstar only looks at the securities, but I click the option here to show what a drag cash can be on our portfolio. So if you look strictly at each portfolio, Morningstar will say we're doing better than iClub says, but that's because of the money, because of the cash.
Right.
So anyway, that's our portfolio.
Great. Yeah, we will discuss after next meeting. Henny's gave that ETF, and I also going to make a comment on the real estate, the REITs, after you're going to present the education topic. So maybe we can look into park our uninvested money. Great. Okay. Thank you. So next,
just don't make it Bitcoin.
Yeah, Bitcoin. Yeah. Actually, my brother wants to give to me. So next thing is education topic. It will be still Roy is going to talk about how to manually adjust data in both online SSG and Toolkit. Well, I was asking to online, but he's very nice because we present in both tools.
Well, and that's because sometime in the future I'll do a comparison between the two. So I thought this would be a good way to introduce that subject. So as Gia said, it's to manually adjust the data. And because there are people, not members of the club, who are watching, I just want to put our disclaimer again that I'll be talking about a couple of stocks, but they're not a recommendation to buy or sell. Just I'm using it for education purposes. Why do we want to manually adjust the data? Well, there's two basic reasons. One is to use new quarterly financial information before we get it into our stock selection guide. We get it through Morningstar. And if you're in Toolkit, you have the option of getting it from Better Investing or from Stock Central. If it's the online tool, you're getting it strictly Better Investing, but they all come out of the same place, Morningstar. And like, for example, in the stock I'll be talking about, came out with their earnings report this morning. So if we needed it for tonight's meeting, we don't want to wait 2 or 3 weeks for Morningstar to include it in their database. So this way we can input it and then it'll come out on our new SSG. The other is if there's some reason why a stock for a particular quarter, the GAAP earnings give you the wrong indication of how bad or how good the stock is doing. We'll use non-GAAP numbers. We'll either take away the charge or maybe even take away a bonus if they sold something that really wasn't part of their business and they're including it in their financial results. So what we'll do in both the online and Toolkit, we'll go into the data file, and this is what they look like. The one on the left is the online version. The one on the right is the Toolkit version. And
how did we get there?
You hang on, Tom. We'll get there. So how do you get to the data file? Okay, first I'm going to show you on the online SSG. So here you can see the last quarter that's available was March 2017. And you know, that's where you can see it, and this is actually the blown up part. And you go up here on the first page of the SSG to the data. Actually, I think this line is there all the time for any 3 of these tabs. But that's the data, how you access it there. You click on the data button. So, like I said, this morning, FC, Manufacturing Electronics, issued its Q4 2017 earnings report. Sales were $5 million. Earnings were 8 cents, and it was the way the report was. It was unclear what the pre-tax profit was, but looking at the numbers, I'm putting it around $200,000. Now, this is a very small company. It certainly would not be one that I would recommend, especially when you see something going on. But when you click that data button, you then go into quarterly data, and you can see the last. Oh, I got this out of order. This line here wasn't there, so you can see how what you do is you click on it, it'll put up the 2017 in the 4, then you put in these numbers. I put the 5.4 million, the 8 cents in earnings, and then the 2 cents or 200,000 in pre-tax profit. And in this column here, this is final. If it's if Morningstar issues sort of preliminary numbers, it would be a P, but because I'm doing it, it's a U, and so it's user modified data, and that automatically clicks in. And I understand there's a way you can freeze this if you want. Maybe it's by clicking this button. Oh, that locks it. So I could lock it in, and it'll stay there forever. If I didn't click that, then when Morningstar updated their database, this would change to whatever numbers Morningstar issues. Now, here's the annual, and you can see there's no 2017 numbers. So it didn't automatically update that. But it did update the visual analysis page. So now it's all the way to the 2017, and it's all 4 quarters, and this says June 2017.
Yeah.
I don't understand. Rizal, you said that you did not enter in the data sheet, but it showed visually. What do you mean?
It didn't do it in the annual
Oh,
page.
okay, the quarterly page.
But it does
Got
update the visual.
Okay.
So now in Toolkit, you go to that, you click the button for data, and you have a drop-down selection. And by clicking that, and you get a new line. It'll automatically put in the quarter that you're looking at. So 4th quarter, June 2017, which matches that. And then you just enter your new numbers, and then it'll change it here and down here as well. So just by going in there and adding those numbers, you'll update your data. And again, you could lock this, or since you're entering what was a preliminary earnings report, I would leave it to be updated by Morningstar.
Okay.
So any questions up till then, other than the one that was asked? Okay, now there's another reason to change, and that's if you have the earnings per share that was reported is really off. And most of you are familiar with Starbucks. It's going good, and in fact, during this period of time, Better Investing was getting its data from Standard & Poor. And this was a really nice graph. And then suddenly they changed suppliers to Morningstar. And the difference is Standard & Poor would look at what went on with the company, and if they felt it was a one-time charge, they would ignore it and use whatever earnings would be reported without that charge. Morningstar, however, uses pure GAAP numbers, generally accepted accounting practices. If they write something off and that reduces their earnings, that's what they'll reflect. So suddenly, in a club I took over right about here, and we had a club with a nice bulge. Suddenly, the floor dropped out, and why. It was really scary till we researched it and found out why. So they reported 1 cent earnings for that quarter. And that was because they paid a settlement to Kraft on a lawsuit and just wrote the whole thing off in the 1 quarter. Now, going back that far, you can't do it in the online version. So I mean, if you have a company that happens to, hopefully you're right on top of it and you can change it right here in these 3 years. But it's a problem when you go and you start looking at a company that had something 4 or 5 years earlier. So, but in Toolkit, you can change it. You go up here and you change this last quarter of data, you roll it back, and suddenly you get here, is September 2013 number.
It was because SSG, the online tools only give you 5 years, right?
Yeah.
Yeah.
Well, 3 years. 3 years.
3 years. Okay.
Yeah. So here, and it shows it changed, and then you can see, and this is why it was really a lovely company, nice bulge, because they had a huge quarter, and that may be why management decided to take their loss right here at this quarter, because that was their best quarter, and maybe they thought it would hide, the loss a little bit. Because if it had been one of these other quarters, they would have actually been in negative numbers.
Okay.
After talking to Gia, what I did realize is you can change it, and I thought I had a slide on it. But if you go into the annual report or the annual data, you've got to do some calculations ahead of time, but you can change that annual data because that's got the full 10 years of history. But you just can't easily change it in quarters like you can in Toolkit. But anyway, that's how to change your data.
Okay, great.
Manually.
Pretty complete. Very nice.
Okay. When we speak of Starbucks, maybe next month, Jane and Barry can look into Starbucks, see if it's a buy. Just a thought. Stock idea, I mean. Okay, next for us is the stock study presentation. I'm going to let Henny to kick off. I'm going to make Henny a presenter. By the way, if you guys did not hear the early conversation, Henny actually is on business trip. He's in Vienna. So he is like at 3:30 a.m., so 9 hours ahead of us. So forgive him if he sounded a little bit sleepy. Actually, we have also a guest, Faiz. He participated in a stock study with us. He's based in London. He's 8 hours ahead of us. And for some reason, I don't see him online. I don't have his phone number to text him. I only email him. I say, are you on? So I don't see him. So we will see, Henny, what we can do this. So
Okay.
maybe he forgot alarm or something. So yeah.
All right. Well, thanks, Jay. And I am getting a bit of spotty internet, so I got cut off earlier. So just give you a warning in case I drop off. So
Okay.
okay. So today's stock study, we're looking at three companies, and each one of us will talk about each of the companies in turn. I'll start off with FleetCor. These three companies are in financial payment. So very quickly, the table of contents, how did we find these companies? Then we'll talk about industry overview, and then we'll talk about each of the three companies. We'll do the SSGs and give you a recommendation at the end. Okay, so how did we find these companies? First of all, Fleet was featured on the Mid-Michigan Chapter Roundtable webinar in August. Both Jay and I attended that. It was presented by Ken Kavula and identified as a triple play, and I'll explain what a triple play is later on. And because we're doing an industry study, we debated whether, first of all, whether Fleet is a company that we should look at, and we decided between the three of us that it was worth having a more detailed look. Now, just a caution here, sometimes I've listened to these webinars in the past by other chapters, and somebody will identify a stock, and then sometimes we'll just go ahead and maybe invest in the company without doing our own research. I've done that in the past. So, but I think it's really important to do your own research and come to the conclusion on your own. So we debated this quite a while and decided that it was a good company and we should look at it further. Then we decided to look at competitors because we're doing an industry study, and we identified the competitors from the 10K. We used a number of different sources. They all had different competitors, so there was a lot of discussion about who's an actual competitor and who's not. And what we came up with was that the 10K, the company itself, identified who its competitors were in different market segments. They operate in a number of different areas, and in each area they list different competitors. Okay, so what is the industry sector and who are the competitors? With the SIC code is 7389, and if you read value line, it says that that's called financial services diversified, and it talks about asset managers. So these, I think, are sort of for high net worth individuals and institutional asset managers, and then credit card services, and then pawn lenders. So those are the three sort of areas that that value line identifies in this sector. Morningstar calls it something different. They call it data processing and outsourced services. And when we talk about these companies, you'll see why it might be in data processing. But that's a little bit different, as you can see, from financial services. So again, there's, you know, you kind of have to take some of these with a grain of salt. There's different classifications. Better Investing classifies fleet and the competitors in the business services. And then Zacks calls them financial transaction services. So we decided to go with Zacks. It seemed to fit the best. So, and the reason I went with Zacks was just wanted to see how this sector was doing relative to the general market. And this graph shows the sector, the financial transaction sector, in the green line versus IIV, which is an ETF that tracks the industry, and it's doing quite a bit better than the S&P 500. So sorry, IIV is tracks the S&P. So they're just comparing the two. So we looked at the sector and thought, okay, this is a good sector, because one of the things that you know really helps with returns is if you pick a stock in a sector that's doing well, and so that's the case here. Okay, so I'll start talking about FleetCor, and this is the picture of their head office, actually, in Georgia, Norcross, Georgia. And FleetCor's customers consist of primarily businesses and companies that operate commercial fleets, like trucks, and even in some other areas like mining companies that operate fleets of heavy equipment and that sort of thing. They also deal with leasing companies, like truck leasing and people like that, petroleum marketers that move petroleum products around, and governments. So anybody that has a fleet of some sort, a fleet of vehicles, whether it's trucks or other heavy machinery, would be their potential customer. What did they do? They offer card products for gasoline and lodging, food, things like that. Just a quick side note. I'm in Vienna, and I wanted to check out what the TV was like here, what kind of shows, and I'm flicking through channels, and I see this show called Truck Babes, and it's about female truck drivers. And so I said, oh, we're doing a study on this. So they were showing these female truck drivers, and it's like a reality show. And the one lady was trying to make a shipment in the middle of the night, and she's running out of fuel, and she has a GPS, stops at a unmanned gas station and puts in a code, and the pump is activated, and she fills up the truck. And so this would be something that Fleet does, is these unmanned gasoline stations. And then in other sort of other stations and so on that are manned, they would actually, the truckers would have gas cards, and they would use that for food, they'd use it for gas, they'd use it for some of these truck stops have small hotels where they can rest and so on. The second thing they do is telematics, and this is sort of logistics. It's getting a lot of collecting information about the movement of vehicles and drivers, and optimizing all of that, giving it to the companies so that they can make decisions about their fleet. And then they have proprietary equipment that they sell. So say you're in a mining company in a remote location, and you need, again, you need some sort of refueling equipment, and you want to make sure that it's not going to be compromised, and somebody's not going to come in and steal the fuel. So they do this for mining, agriculture, and so on. And then finally, they have a number of payment programs where they'll process all of these transactions on behalf of their customers, and they'll make payment. So just a quick look at their revenue. You can see on the left-hand side, fuel cards, corporate payments, tolls. So they own a couple of companies that collect toll fees, and they operate the tolls as well, lodging, and so on. And by far the largest is the fleet cards. So this is where they get about over 50% of the revenue, and then tolls are pretty significant as well at 14%. Revenue by geography. The company is focused on the US, but they're expanding in Europe, in the UK. They also just bought a company in Brazil that looks at collects tolls, as I was saying earlier, and a few other. They're in Canada, for example. I've seen them in Canada. So a number of other countries that account for about 8%, but predominantly in the US at 63%. So how do they grow? I think a lot of times when we do these stock studies, we're looking at the SSG, and there's a lot of debate on which number to use, what the right PE is, and so on. But I think one of the key things when analyzing companies is looking at growth strategies. How will they actually grow revenue? And is that growth sustainable? Do they have a competitive advantage? That type of thing. So in the case of Fleet, they grow by acquisition. They've done 65 acquisitions since 2002, and you'll see later on from their SSG that acquisitions are pretty dicey because they don't always work. You have to have a very good management team to make an acquisition, to integrate it, and to realize the synergies. And so they've been doing that quite well. The other thing that they do is they have these sales and marketing networks. They use a lot of data to look at their customer base and see how they can cross-sell to existing customers, and then how to get new customers through these networks. They also have a number of strategic relationships, so oil companies that typically ship a lot of product. These would be petroleum-based products, oil and petroleum and motor oil and that sort of thing. So they have relationships with these companies, and they use those relationships to expand their business. And sometimes these companies, the oil companies, will have other partners, and Fleet will go into those partners through their existing relationships. They're very strong in account management for their larger customers. They spend a lot of time with their large customers and looking at how they can better serve them and how to retain those accounts, and they have a very high retention rate for existing accounts. And then finally, they create new products and services, and we'll touch on that briefly later on. But new types of payment cards, they're developing some apps for truck drivers to use, and they have some new products for companies like Uber, for example. So you can see here on the right, the little picture. The top graphic is an app that they have for fuel. Truck drivers can look at different gas stations and see where the best prices are, and they can that way they can go to the ones that are least expensive. They have a partnership with Uber, so a lot of the Uber drivers now can use these fleet cars when they fill up, and they get a discount. So I was reading that Uber drivers don't make very much money, so these discounts on fuel are pretty attractive to them, especially if they drive a lot. Other areas of growth are so organic growth. I talked a little bit about renewal of contracts. They had a big contract with BP, and that was just renewed. They're trying to expand in overseas in Brazil, Mexico, the UK, and Russia. And they acquired a company called STP in Brazil. It's the largest electronic toll payment company in Brazil, and that's been very accretive to their earnings per share. They've done very well with that company to date. Comdata is again, they're into virtual sort of payments, and they work in certain areas in North America where Fleet is not. So the Comdata acquisition is allowing them to get into new markets in the States. And then just recently, they acquired Cambridge, which is a Canadian company out of Toronto. And Cambridge does a lot of cross-border transactions. So if you're an international customer, say for example, say you're an oil refinery and you're shipping oil between Canada and the United States, and you have costs on both sides of the border, and you need to pay accounts payable, accounts receivable. There's exchange rates, there's tax issues, and so on. So Cambridge takes care of all of that. You can outsource those things to a company like Cambridge. And so Fleet is using the Cambridge acquisition again to, as they grow internationally, this particular company is going to help their business quite a bit, because they'll be able to provide services to their existing customers in different countries, whereas right now they can only do so in the United States. So that's a very good acquisition for them. So recent results, they had organic growth of about 9%. It would have been 11, but they were doing an IT migration. One of the companies that they acquired, one of the things they do is they change the systems over so that they're consistent and they're using the same system. So during that IT migration, there were a number of issues. It didn't go very well, and it impacted payments, and that impacted their earnings. But they've, Fred, in their quarterly call, they've identified what the issues were, and they're using the lessons learned going forward so that when they do these IT migrations in future, they won't run into the same problems. So some other things are Speedway is a company that they acquired, and they're seeing some very positive synergies between Speedway and FleetCor, and that's helping their earnings. And then a lot of their other products are doing well, double-digit growth in gift cards. So these would be gift cards that drivers would have from their companies for doing a good job or what have you. And so the tolls section is or toll segment is doing quite well. Lodging, they actually own some hotels, short-term hotels for truck stops. And finally, they have an accelerated share buyback program, so they're delivering value to shareholders through share buybacks. And all of these things have been helping their growth and driving their earnings. So just wanted to compare them to their peers. This is a chart from, I think, CNBC, and so you can see that both the other two companies that we've studied, Vantev and TSS, over the past year, they both have been doing quite well relative to Fleet. So this is a relative valuation So Fleet is down 10%, and Vantive and TSS are up between 30 and 40%. That's just for the last year. However, when you look at the 10-year history, Fleet is doing quite well relative to the two competitors. And the reason for the drop within the last years, there was a lawsuit. Some of their customers were claiming that they were doing some price gouging, and when people didn't pay, when clients didn't pay their cards on time, Fleet was overcharging for their late payment fees. So there was a lawsuit related to that, but management thinks that that's not material and that it won't impact their numbers. If you look at the chart of their stock price, you can see that right around the time of the lawsuit, the price dropped quite a bit, and then there was another lawsuit, class action, that because of that drop, they didn't really declare some of this information apparently. But again, I listened to the conference call, and these seem to be issues that have been dealt with, and the stock has been going up. But right now it's undervalued for that reason. When you look at the metrics relative, again, to industry average and sector average, and I won't go through these because it'll take too long, but just kind of glance through the blue dots is where Fleet ranks. And so anything that's on the right side, where the dot is more to the right, is positive compared to industry and compared to sector, and also the S&P 500. So looking down, they're either in the middle here at the top, so price earnings ratio, price cash flow, they're kind of in the middle. Price to book, they're doing quite well relatively speaking. Book value has been going up, and so on and so forth. So the metrics look fairly good. And then this is next year's earnings, again comparing them to some of the competitors. You can see Vantive and TSS at the bottom there. The forward PE is quite attractive, 14, or sorry, this is the current PE ratio, 14 versus 19 and 18. So you know, again, they're undervalued relative to competitors. So looking at the SSG, I just took a screenshot so that to save a bit of time, but I have it up and on Better Investing. You can see up straight and parallel. Fleet is a small or medium-sized enterprise, more medium right now. But so for an SME, they have double-digit both sales and EPS, which is good. Their book value keeps going up, which is another pretty good sign. And looking at pre-tax profit, it's sitting around you know, average of 5 years is 39, almost 40%. So that's pretty healthy. Now they do have high debt to capital, and their return on equity, I think, is pretty good. The graph here, the trend shows red because it's going down, and I think that's been due to recent acquisitions. But you know, the debt is not, again, too bad, given that they're in the credit card business essentially. So they do have a lot of debt that they need to run their business. Now, whenever we get into these SSGs, there's a lot of discussion about which numbers we use. So what I did here, I kind of did different cases just to compare. So the first case is a discussion that Jay and Fayez and myself had about what do we use for sales growth and so on. And that's in this case, we forecast the high PE at 30, sales growth 15. We use the preferred procedure. with a 37% pre-tax profit, 32% tax rate, and 100 million shares outstanding. And that gives you the 14.9 for earnings growth, and then high PE was 30, low price was 114, roughly 113.9. And if you run the numbers using those metrics, you get a 4.9 to 1 ratio, and which is pretty good. A forecasted high price of 282. The price right now is about 140 something, 142, I think. Then what I did was I took the value line forecast and kind of had to work backwards, because you can't just pull these numbers off of value line. So I tried to use numbers in the preferred procedure that would give you what value line was projecting. And so for sales growth, they were projecting 7%. I had to put in a 67% pre-tax profit to make the earnings come up to 21, if that makes sense. And so value line had 21% earnings growth and 100 million shares outstanding. I used a 32% tax rate. And in order to get the 21%, I had to fiddle with the pre-tax profit, make it 67%, which is a bit high. Well, not a bit, it's a lot high. But anyways, that if you use those numbers, again, you get a 5 to 1, basically upside down side ratio, and potential price appreciation of 130%. Then the next column, I did the BI member sentiment. If you're not familiar with that, if you go under, I think it's Better Investing, it shows you all of the SSGs done by BI members, and you can average all those out. And they average out to sales growth of 12.5 and earnings growth 15.4. High PE 31, which is very close to what we had, and a low price forecast of 102.7. And again, the ratio turns out to be 4.4 to 1. Potential price appreciation of 126%. And yeah, I think I repeated this. Oh, sorry. Yeah. So I repeated this again and just used a very conservative in the middle forecast. 8% earnings growth, 12% sales, and when you run all of those numbers, pre-tax profit is 27%, and using preferred procedure, tax rate of 29, and you get a 2.3 to 1, which is a hold. It's a mild kind of hold. So looking at all of that, the recommendation is that the stock is trading at a discount to its peers, despite all of the growth opportunities that they see, and it's a recommended buy. So that's it, Jay.
Okay.
Any
Barry,
questions?
I don't have a question. Barry had a question on the price. She was saying that today the price went up 4% just today. So today's price is at 151.
Right.
So anyway, I don't know if do you know if 151 is still in a buy?
Okay. I didn't. Let me just. I didn't have my. I disconnected. I didn't put better in thing up. So let me.
Oh, I have it. Do you want me to show?
Sure.
Okay.
Yep.
Okay, I have it. Okay, let me make myself presenter.
So.
Okay. So what do you see is Fleet Corp. You cross out the first 5 years, right? Because they are just right? They went IPO somewhere 2012.
That's
Correct?
right.
Yeah.
Yep.
Okay, if it's, yeah, that's right. So because we are now, this is the latest data. Well, the data I have is for Friday. So okay, we maybe
Right.
we will able to modify data. Can
Yeah.
we modify the?
So if you go back to refresh study,
Yeah, I
go
did.
down to
Price data
yeah.
from
Go
today. What's the price?
no,
157.
no. Just a second. Go back to refresh study. Just 1 second.
I know I already refreshed because this is the data has not come in yet. You know what I
No,
mean?
if you make a copy, do the third one. I think it should.
I know, but what I'm
Oh, maybe.
saying is the data is not ready yet.
Okay.
Do you know what I'm saying? So this is a Friday's data. So what we need to do is to change this to today's data. September what?
You mean data or price?
Price, sorry, price. What's the price today? 150 what?
151.21.
21. Okay.
It should pick up the latest price from.
Right, but because
Well, on the SSG that we were given, the buy goes up to 156. So if it's
okay, so we still have a room
151,
then.
it's still a buy.
Okay, we still have room. Yeah. Okay. So we still have room. Still in a buy. Okay.
I'd like to ask a simple question and just kind of educate myself a little bit.
Okay.
If growth rate's like 12, 15%, and the PE is say 30, so that would be what we would call a PEG ratio of 2, right?
Depends. Yeah, it depends on which PE and which growth rate. They have to match.
Okay.
So usually I think the PEG ratio for this was 1 point something. From what so I looked at like next year's growth, estimated growth, and the forward PE for the same period. I picked that up from somewhere. I can't remember where. What I think it was maybe Yahoo or something, and they were forecasting, a PEG ratio that's greater than 1.
Yeah. I think I can read Bernard's mind. We were taught the same way. Normally, BI doesn't, recommends you don't go above 1.5 or 150. But I've been changing that because your the PE ratio averages, the high was 33. So picking 30 is lower than that. The other thing, the PEs have been rising from 21 to 37 and 33. So it looks like it could probably sustain the 30, even though that's double what your earnings growth rate is.
Yeah, it's I mean
it's hard for me to learn that, but I mean I'm getting there. So I think that's anticipating Bernard's question. I think that's the situation.
Okay. Does that answer your question, Bernard?
Well, yeah, a little bit. If we ballparking it, the PEG ratio then is still between 1.5 and 2, right? I mean, depends on what you use.
Yes.
Okay, fine. So that's a little bit pricey, but okay, but that's all right.
I think
it might be.
Yeah, go ahead.
Go ahead, that's fine.
Yeah, when we looking at this company 3 weeks ago, it was 140 something, right? Henny, just a little bit over one. I think 141 or 143. This reminded me really like MIDD we bought, So, but it is still a buy. But however, it's already went up just in that 3 weeks window. So. I think the reason why it was undervalued could be because of the lawsuit they had last year. You think, Henny? Is Henny there?
Oh, I hope so. Jeez.
Oh, he dropped it. He lost it. Hopefully he could come back.
Yeah, he dropped out.
Yeah, he dropped now. So I have a feeling.
The internet was iffy.
Yeah, I have a feeling it was because the lawsuit. It was. I think he also mentioned early on there was a lawsuit, but yeah, that was why the undervalue. But we can confirm with him when he back on. So okay, this is a Fleet Corporation. Any other questions?
One more.
Okay, go ahead, Jen.
I just wonder, how did you pick earning EPS growth rate of 14% or 15%?
Oh,
Because historically they only have 9% or 11% if we exclude that one-time charge.
historically is a 15%. He did cross out 2007 to 2011 because they went IPO in 2012.
I see.
Yeah. He did mention early he used preferred procedure. I think he justified margin, the pre-tax profit. He justified that. He also justified taxes as well.
Okay, because somewhere along the presentation, I saw the EPS growth rate of 9% or 11% if we exclude the one-time charge.
Oh. Let me see. The presentation he had.
Yeah.
I don't know where we'll be. I'm not sure where we'll be.
I think in the background.
Oh, it's in the background? Okay. Oh, okay. In the background. Do you have any idea which slide is?
I think before that.
That's the background slides.
And there's a description of the one-time charge. If you exclude it, it will become 11%.
Where is it? That
I
one?
don't know.
Oh,
No.
okay. Yeah, hopefully he can get on. Oh, is
Hello?
he on? Oh, great. Okay,
Yeah.
we had a question. Okay, Jane had a question. I cannot
Yeah.
find your slide. Go ahead, Jane. Can you repeat that question again? He said something.
Yeah. Somewhere on the presentation slide, I saw earning per share growth rate of 9% historically, but if you exclude the one-time charge, it becomes 11% somewhere. Is it EPS rate of the
That's only for one of the segments. It's not for the whole company as a whole. They were just comparing each of the segments that they report under, and that was just for one of them.
Okay, thank you.
So I think one little bit more. I think Haney did a real thorough job and good job. I wonder, is there some steps being taken, because in the future maybe these trucks and vehicles might want to charge instead of buy gasoline? Is the company looked at that at all? And by the way, 65 acquisitions, that's a lot. But go ahead. I was wondering if they're looking into electric vehicles.
Yeah, I've been reading a bit about that, Bernard, and I think it's Google or somebody that's testing a heavy duty truck, electric truck. It's still pretty early, days, and when you look at the penetration rate of electric vehicles, just not trucks, but just electric vehicles, it's growing, but it still has a long way to go to catch up. So I think, that they need to think about that for sure. I'm just not sure of the timing. It's probably not, not in the next 5 to 10 years, I'm guessing.
Yeah, actually, Bernard, we asked that question ourselves during our meeting discussion. We thought about electronic trucks, and Haney made a point of it like a Tesla. Like he mentioned about his friends have Tesla. They live in Canada. during the winter, they consume much more batteries, right, Henny? So
Yes.
it's still not quite mature yet. So we thought about that actually. But definitely, I agree. It won't be next 5 to 10 years, or maybe
And I
5
think,
years.
like if they, right now the electric charging stations, I think in most places are free. But at some point, if you migrate everybody over, then that electricity cost has to be borne out by somebody. So they'll probably start charging for it, and you could use the same sort of card method to charge for the electricity. But I think it's a very valid point. I think it's a bit early to tell exactly what's going to happen.
I have a question.
Okay, Tom.
What is the advantage of these cards over something like a Visa card or a debit card?
So what they do is it's not just the card, but so first of all, a regular Visa card, you can buy anything. With these cards, you can only buy certain things: fuel, lodging, that sort of thing, food in certain places, and they only work in within the network that these companies participate in. So they can't use that card and walk into a Walmart, for example, and buy something, because the companies want to control where the employees spend their money.
Okay.
But in addition to that, they provide some services around those cards. So they do a lot of statistical analysis for the companies to tell them where they're spending their money, and so they can make better decisions. So it's two things: it's the cards and then the services around it.
Okay, thanks.
Okay. So I'm monitoring Faiz on the attendee list, but he's not on. Let me check quick list. No, he's not. So I'm just go ahead to present TSS, one of the competitors. Both Ventive and TSS are the competitors which Henny mentioned. The reason for TSS is mainly for the corporate payment. For Ventive, we want to as a competitor in gift cards area. Actually, it's 9%, I believe, in the revenue, if I remember. But for corporate payments, about 10 or 12, I can't remember what was the percent. Let me go back, have a quick look. Corporate payments about 9, and gift cards about 8%. So, okay, so I'm going to talk about total service. So how does this company make money? Interesting. This company also based in Georgia, Columbus. They provide 3 different services. One's the electronic payment processing and the merchant services, and prepaid card services. In electronic payment services, they mainly primary is for charges based on the number of accounts on file. And for merchant, they do is to service to acquiring banks. For example, the banks where approved transaction funds are held, or merchants is like the service to approve a credit card transaction for the merchant to obtain funds from the acquiring banks. So Netsband, this company, this is one of they are one of their service. Netsband is a company they were acquired in 2013. So they initially, so right now as 2017, there are 3 operating segments effective January 1st, 2017 this year. They combined North America services and international services into under one as considered as Issuer Solutions. So the Issuer Solutions, as you can see, they are about half of 50% of their revenue was from the issuing solutions. About 29% is from the merchant, and then 22% from the prepaid gift cards. In the bottom, I grabbed some of the from their companies. I believe it's an annual. They have a technology presentation, also have an annual report. They both have the slides talking about. So they are for issuing solutions. They are number one in U.S., UK, and Ireland as third-party credit. Number one in China for Union Pay. So Union Pay is kind of like a Visa and MasterCards, but however now in China it's Union Pay and Alipay are the major competitors. Alipay is kind of like a PayPal sort of thing. So Jane lives in Shanghai now. I visited Shanghai in July. As almost everybody, every vendor are using mobile pay these days. Even small street vendor, you can use mobile pay. So Union Pay is still big. Like if the Chinese shop in abroad, like in US or Canada, I'm not sure Canada in US. So if they don't have a Visa or Mastercard, they use Union Pay, but not all stores accept Union Pay. So anyway, they are number 2 in Europe at third-party credit. For their services, they are the number for the merchants, they are the number 6 US acquired based on the revenue. For in the last one is number 1 in US prepaid program for prepaid gift cards or debit cards, where is it by gross dollar volume? They are number 1 in US prepaid program. So for their future growth, so they talk about they are expanding their business with their existing partners and also new partners for their organic growth. But they also talk about they will through acquisition as well. So yeah, they're focused on expanding their partner and merchant base for both the new and existing clients. Also, they see good growth opportunity in e-commerce. As on the right-hand side, this stats has show from the company's website that mobile commerce have a 76% mobile commerce in the last 4 years, and the company also believe that they have a great growth opportunity in e-commerce and also mobile as well.
Wow.
And yeah, they are doing what they do is they try to impact of they try to change. So consumers are changing purchase habits, right? Like right now, we do a lot of online shopping using mobile pay. So I can see that how the companies, in that area could do well. After I studied this company, I like this company. Unfortunately, this company is overpriced right now. So as you look at the graph is not really upstream parallel, but they are generally showing trending up. But I was not impressed with their 10 years historical sales. As you can see, it was only like about 8%, like single digit. But as for 5 years, when I cross out, I only kept the last 5 years, the growth is about 20%. So the last 5 years, they're doing quite well. But pre-tax profit and return on equity were down in 2016, and also they have a high debt due to acquisition. They also have a lot of acquisitions going on in the recent years. I believe the biggest one is that for the Netspan in 2013, they purchased in cash for 1.4 billion in cash to buy Netspan. 2016, they also have 2.35 billion all cash transaction with a company called the TransFirst as well. So that's why you see the debt went up in 2016 because they paid all in cash. So before I go over my SSG, I want to also show you that I did look into some analysts' projections, and as you can see, the value line projects the revenue is about 11.5%, and the Morningstar is about 18, and Reuters is about 17 in the next year or two forecast. I don't know how the analysts calculate the growth projection. So I just compared 5. This is a Yahoo. Next 5 years is about 11%. Zach is about 12%. So I don't know how they calculate. For example, if you look the past 5 years, the Yahoo says it's 22 and the Zach says 18. But if you look the SSG, it's not like that. I'm grabbing my SSG very quick. If I look at the SSGs, it's not quite well. 22. That's pretty close. 20% or 22. So I don't know how they calculated with the analysts how they calculate the pass. They have about 2% off between Zach and Yahoo compared to Morningstar. So maybe there's some non-GAAP gap. I'm not sure how they calculate it. So my recommendation to TSS is a hold. Well, our intent is try to find the best company in the industry. At this point, I do think that FleetCor is much stronger, just looking at the fundamentals. But by studying TSS and Inventive and FleetCor, it does give me some confidence how the business is making money and how technology is going to drive and improve in the payment processing area. As I mentioned, TSS is overpriced. We can quickly have a look of SSG for TSS. I took an average. Wait, I took average. What I say in my first cut. Oh, okay. So I chose 11%. Okay, I chose 11 is aligned with the value line. I don't feel comfortable projecting future growth higher than the historical growth. Oh, okay. Yeah. So the analysts projecting long-term growth between 11.5 to 18%, and so I don't feel comfortable to project the future growth higher than the historical growth. So I decided to just go with the lowest analyst projection, which is 11%. Just see what that gave us. And I did use the preferred procedure. I did modify the data for pre-tax profit margin. I chose I using 2011 pre-tax. I using 11% for 2017, and I took average last 5 years. It gave me 14.6. That's how I did it for preferred procedure. And then, so for the high PE, I gave 22. Why do I give 22? Oh, just above the average PE ratio. So, and the low PE, I decided to use, the low PE, I'm using the cross outlier. Oh, that's outlier. I cross out, so it's supposed to be 16.7. But regardless, I think I used the recent 2016 low price for 2016. So it's not in a buy, but the idea is that I feel pretty good after studying the company. So to support the idea of FleetCor in the same industry, kind of FleetCor has some potential. Even though FleetCor is kind of a specialized mainly specializing in fleet and oil area. So anyway, questions, comments?
Well,
Hey, what's the,
to me, the one part of this is kind of a racket. These gift cards, when you sell those, you have to realize that 20% of the gift cards that are sold are never redeemed. So I guess that's a real profit center.
Oh, you were saying that people buy gift card, but they never used?
That's right. 20% are never used.
Mm.
Yeah,
That's the
I've
average.
heard some number around that number.
Okay. Matt, you have a question too. Matt?
No, I didn't have a question.
Oh, somebody had it besides
sorry,
Bernard.
that was me. I was just
Oh.
wondering, Jay,
Oh, okay.
on your on your preferred procedure, what did you use for shares outstanding? If you go to first page, yeah,
Share
and
outstanding.
if you can plot or okay, so they have been buying back shares, so okay.
Mm. Okay.
Okay.
So
It was a
this,
lot of shares too, wasn't it? Sorry, I'm late.
yeah, yeah.
Yeah, it was pretty significant buyback, I thought.
So
Like
is that the reason?
would that continue in the future? Like if you wanted to be optimistic, you could say that they'll continue buying back, and that'll lower your shares outstanding. Maybe like to does Value Line project what the shares outstanding are in the future?
I don't remember.
Which company?
TSS.
Because as I recall, they do. Let me see here.
Where is it? Buyback.
On the right hand, well, what you
Well,
do is you just look at the number of shares. They show it increasing. But a report I heard today was that in 2017, share buybacks have dropped by 25%. Now that's all companies, so that means there's still 75% did buy back this year and may continue, but it's the bloom is off the rose a little bit.
Mm.
I think it's I thought I saw 180. So
Here.
common shares outstanding,
Right.
yeah, 180. And you had 184, I think.
183, I think.
183. So it
Oh, let me
shouldn't.
see. 185. Oh, I have a 185. Should I change to 183?
Sure.
180?
Oh, it has been 185 for a couple of years,
Yeah.
at least according to Value Line.
Yeah. So what should I use?
Yeah. Well, if Value Line's saying 180, let's see what that gives us.
Okay.
Just
Even
curious.
higher. Yeah. 15%. Just about 1% higher.
Yeah. Okay. So it's not going to make much difference.
I'm wondering why can you go back to the graph?
Uh-huh.
I'm wondering why the jump in earnings, but pre-tax profits goes down.
Here?
Yeah.
The green line goes up and the pink line goes down between 15 and 16.
Yeah.
Sales went up.
Yes.
Is that when they
was-
had their acquisition?
Is that the lawsuit?
No.
Litigation costs?
No, acquisition in 2016. They paid the cash they paid the 2016 they acquired the transfers in all cash transaction for 2.35 billion.
Oh, okay. Pardon me. Green is sales. So okay.
Yeah.
I had one question about that company. Who are their competitors? Did you say that and I just missed it?
Their
Did you
competitors?
find
Oh
them?
yes, I did look their competitors. Hold on, went to search. I want to see what they say their competitors for this company. Sorry, I'm looking at my cheat sheet. Yes, they have a few competitors. They did mention for Nespan, the competitors are Green Dot Corporation, America Express Company, and First Data Corporation. I believe First Data Corporation, it's their alliances. It's their partner. For merging,
Okay.
their competitors, First Data Corporation, which is the alliances, and Ventive, and the Global Payment, and Elavon, ELAVON. I don't know that company. So for issuing services, their competitors are again First Data Corporation, which is their subsidiary. First Data Corporation is the largest competitor in issuing services.
Okay, thanks. I was just curious.
Right.
Didn't know.
So as December 31st, 2016, TSS is the largest third-party processor for credit card issuers in the United States. So yeah, they're processing about 40 to 45% domestic Visa and MasterCard credit cards in the United States. About 80% in Canadian credit accounts. Approximately about 20% in European markets like UK, Ireland, Netherlands, Italy, Germany, and Switzerland. So yeah,
Sounds good.
I like what they do, but they just right now. Also, this company is smaller compared to FleetCor. FleetCor is a medium-sized company already. So this is about what, 4 million, 4.1 million, right?
Billion.
Yeah.
Four
Oh,
billion.
so 4 billion. So it's larger. So it's a median, also median. 4 billion is a median.
Yeah.
Okay.
Where's the line between large and medium?
The line is anything less than 1 billion is small. Between 1 billion and was a 10. I have to look the cheat sheet. Do you remember? I can show just a second.
Yeah, it's 10 billion.
10 billion.
Over
Yeah.
10 billion is large.
Okay. Here's the cheat sheet. Can tell you the company size. So 1 billion to 10 billion is median. Large is greater than 10 billion. Okay.
Thank you.
Okay.
And
sure.
that's in sales.
That's in sales. Yes. Yeah, it's in sales. Okay. So, okay, do we want to quickly take a look at what VICS presented or no? Just
Is it a
Well,
buy?
we're running
No,
out
it's
of time, and it seems to me that stock didn't have a very good
right.
percentage, 0.6 to 1. So
Yes, he said
Yeah,
that it's going to pass. Yeah, he's going to say yeah, he's passed. Yes. Okay. So, okay, no any other questions. So we just move on to quarter report for HEI. Do you guys
okay.
have any? I can.
One last question on that.
Yeah, go ahead.
The first one there that Hanny gave us, are they planning to VTR? Are they planning to fleet? They planning to do any dividends?
I didn't see anything, Bernard. So not in the near future. I think because they do acquisitions, they probably use their capital for that.
Okay.
And also
Thank you.
IT investments, because their business is more and more in the IT space.
Okay. Thank you.
Okay. I'm going to talk about the third quarter report for HEICO. Just before that, though, on these slides that the PowerPoint slides I presented, I've uploaded those to the Google Drive. So if people of the club want to access that, you can find it there under education. And if any of our visitors would like a copy, I will forward it to you. Just send me an email at this roy12@icloud.com. So
I do want to. So as Roy was showing HECO, I want to say 5 is also due, but Joanne is in Europe walking 100 miles, 200 miles, I guess, into a different country, different month. She's in Europe for 2 months, walking and backpacking, I guess. And so she will be back in October. So 5, based on the portfolio Roy showed us earlier, I believe was gained 5%, something like that. So she can give us a report when she gets back. So now it's HECO.
okay. And on the SSG that we have in our system, we had projected it sales growth of 10%, earnings at 12, and the sales growth just about hit that. It was 9.3. I mean 9.9. The trailing 4 quarters was 9.3 because it was less last quarter, I think. Earnings were a little lower than that at 9.3 and not the 12. The current PE is a little nosebleedy, 41.6. The average PE is 28. That's averaging the high and the low PE. The relative value is 1.49. So now value line says it's 1.41, but that was dated September 14th, which if their online version is like their printed version, it's about 10 days before that. So it was earlier in September when they came up with that. And the price has risen, so that's doesn't surprise me that the value's gone up. The upside down ratio is 0.7 to 1. What I did was keeping the SSG like it was, just upgrading the price and data. This is what it shows for a 3.3 compound annual return. It certainly isn't one we would buy, but whether we want to, sell it, I don't think it's quite there yet. I looked at the 10Q. I also read the transcript from the conference call, and I really couldn't discern that there was much going on other than they were spending money to acquire a couple of companies, and one is still in the works, but Arrow Antenna closed last week. And so I think based on everything I've read, I would keep the 10 and 12 projection rates. And like I said, it's a weak hold. It's getting close to where the SSG would recommend a sell. It is still a hold. And the reason why I don't recommend selling at this point, besides the hold recommendation from the SSG, is the stock has done extremely well this year. And everything I've read, even though the SSG comes up with sort of marginal numbers, the acquisition of Arrow Antenna and some of the other things they're doing, and the need for their services, both in airlines and also the military aircraft, I think this may turn out to be a good year, and it's one of those areas that the SSG just isn't hitting on all cylinders. So I would like to wait the one more quarter till we get an annual report in. The one thing that concerned me was looking at the 10Q. It was unaudited. I went over it 3 or 4 times trying to find an auditor's report. There wasn't one, and I was going to call the company to try to find out why, see if I could get into investor relations. Their website doesn't list an email for investor relations. Most companies do. So it's like almost that they don't want to be bothered. And that sort of upsets me. But they seem to be a highly reputable company other than that. And so, I think it's just one that let's sit and wait another quarter and see how it goes.
Okay.
Let me switch to, let's see here. The value line, it hasn't done great recommendations. Only a 30% gain. The range -10 to a +30. And the sales projection, they say maybe 9% and earnings 12. So that's another reason why I say let's just leave the numbers alone. But in here, they have another, they talk about the aero antenna purchase, and they had one earlier, the air cost control, and they just, part of their growth is through acquisition, but they've been doing this a long time, acquiring little companies and making them better because it fits into their procedures quite well. They've turned down other companies that just weren't a good fit, even though they were recruited by the companies to come buy them, and they seem to be very selective. So I think other than that one bothersome audit issue, it just seems like a good company, and the next quarterly report could fool us and come out even stronger than what is anticipated. Okay. So that's HEI.
Okay, thank you, Roy. So next month, Ozark, Bernard, Ozark, you will give Ozark the quarterly report. And okay, so next, let's see if we have any buy or sell motions. Anyone have make any motions on any of a stock purchase today? Purchase or sell?
Well, whoever presented FleetCor, are you going to recommend that?
Yes, I will.
Okay, I'll second it. I assume that was a motion.
Yes, the motion is okay. Buy $1,000 of FleetCor and open for discussion.
How about buying 2 or 3? We got 5,000 just sitting around.
Well, one at a time.
One at a time. Right. The motion is by $1,000 of that. So
I would, the only sort of discussion or caution I've been reading quite a bit about how the market is ready for a big correction, and it's not just sort of blogs or what have you. These are some of the fairly well-known economists, Robert Schiller and people like that. Okay. So I don't know if if what the group thinks about that, but
I think we should. I know we have money. I would like to wait because I want to take a lesson learned as from Ozark or MIDD. So for FleetCor, the price went up 10% in this 1 month, less than a month. So right now it's already at 151. We want to maximize our return. I would like to buy 1,000, and then maybe later on, if perform well, and then plus the annual reports coming out soon, and for all the companies, we can see what we can buy. That's just my 2 cents. Yeah. Go ahead, Bernard. You have something.
Well, what I've read about stock markets, that even a correction is maybe at most 3 or 4 years. I mean, and that if you hold on to a good company at a good price, it'll come through in the long run for you. That's the way I've been taught and done. And I think Ozark's going to come back fine.
I think so too. But okay, so okay, I have a question about this rubber rule. So the motions buy $1,000. So now there's discussions to buy more. Do we have a different motion, or how do we do this?
I think you have to deal with the motion that's been put forward, and then you can have another motion.
Okay. So let's just Yeah, someone have some comments? Yeah, okay, nobody. So, so now we will just vote by $1,000 of free core, and please go to your email, look for stock voting ballot. This time, I ask you to put your email address so I will know who submitted, who doesn't.
I'm unable to put in my email.
Oh, what do you mean?
Well, I clicked on that box and a new window opened, and that box is grayed out. I can't put in my email.
Really?
Oh no, it looks like I can. Sorry.
Okay, it's okay.
Because it worked for me. I'm going to try to submit it.
Okay. Okay.
Okay, it worked.
Okay, great.
Hey.
My ballot came up.
Okay.
Yeah.
It says edit your response. Well, I didn't
No.
make it yet.
So
That's
Tom
if you want
voted, Roy voted, Matt voted. So I have not voted. What's going on?
I am. I can't. I'm kind of locked into this. I can't go to my email.
Let's see. I got an error message. Weird. Oh, Henny voted, Jen voted. So it's interesting. I received 5 response. Right now is actually the majority already passed. If you guys want to see, so I think we are seeing Roy's screen, right? I will make myself presenter. Okay, thank you.
Well, I vote yes. I vote yes too.
Okay.
But I
so,
can't access my ballot.
Okay, it's in your email. Look at your email. I said stock.
Bernard,
I'm
in your email, is there a purple box that says fill out in Google Forms?
Yeah.
I can't go to my email. I'm locked into the webinar. I try to go to other places, and my Windows won't go anywhere else.
Hit escape, maybe.
You know, Bernard, I think for next month, why don't I come over and sit with you because you're going to present next month.
Right.
And then I can show you how to do those things.
Okay.
Gia had to show me, so I mean, I find it cumbersome, but
yeah.
I think by failing several times, I think I figured it out. So.
Okay. So majority will pass, so we will buy $1,000 of free core. So do we have any other motions to buy other?
Or buy more?
Is anything else in the buy zone?
Let me have a quick look. Ozark is it buy? Ozark is buy. Yeah.
Yeah.
Is a Facebook in your buy? Facebook? Let me have a quick look. Club portfolio. Where's my here? Let me have a quick look. What's in your buy?
How can you tell what's in the buy zone?
Oh,
Jay?
that's just based on the high level PERT. I will show you in a second.
Does it automatically update?
Automatically. But that's based on the SSG, the latest SSG submitted, based on today's stock price. So Ozark is by, CVS is by, MIDD is by, Disney is by. However, that's red, meaning that we need to look into these companies. The numbers doesn't seem right. You need to fix them.
Sorry, what are you looking at?
The second tab,
the pie chart.
Yeah,
you haven't shared the screen with us.
What? I have not.
We're seeing a chart of the holdings.
Oh,
the pie chart.
Okay.
Yeah, you still got me.
Oh. Okay.
We're on a chart. I see a chart.
Hold on.
Pie chart, right?
Okay.
Hi, Bernard.
How come I cannot? Okay. Roy, can you make me a make a
I'll try. So,
okay, I did. I did. Okay, I did.
Okay.
Sorry. Okay, got it. So in the report here, I will show you. It's in the summary. The summary is Ozark, CVS, MITT, Disney is a buy. They are buy. But
this summary is on,
right. The
is on
summary.
Google Drive?
Say it again.
It's on Google Drive?
No,
or
I have
no.
not exported it to Google Drive. This is based on the stocks that we have today and the SSG that submitted, whatever the last SSG is.
His Facebook page was just
right.
It's Friday's prices, it looks like.
Right, it's Friday prices. But you cannot just rely on the summary. You have to look the PER. The PER is showing, if it's showing pink, it means that these data is kind of, we need to look into something was wrong. So things have changed.
Can you go to Bank of Ozark's not pink.
Bank of Ozark's not pink, but Biogen's pink, MIDD's pink, Heco's pink. Skyworks, we're just saying the trailing 12 months earning per share is 32%. Need to look into at Walt Disney.
Facebook is also not pink.
Yeah. So I think Facebook is not pink. Yeah. I think there is a TikTok or stock up. Somebody's going to talk about advertising, how Facebook or for how these companies make money. I think it would be very interesting.
Yeah.
Other than smoke and mirrors.
Right. So, but last meeting, Jane did not recommend buy more though. She said something about, what did you say, Jane? Do you remember something about? It was not overpriced. She said that some number was high. I don't remember.
What company?
Facebook.
Oh.
What was high was the quarterly earnings were up 40%. That's what was high.
Because I remember Haney was asking her, so will you prefer to buy this if it were you? And Jean said something. I can't remember, Jean, what did you say? Do you recommend to buy Facebook now?
I have to double check because before I buy anything, I do a study first. I don't just buy things when the price goes down.
Yeah.
Actually, Facebook did not go down. Facebook went up.
Yeah, but I agree. I prefer to do a new SSG before we buy.
Right, I agree.
Yeah.
Or sell.
Right, that's our rule. Kind of. Before buy or sell anything, we will do SSG. So let me. Oh, sorry. Let me just kind of have a quick look. Just have a quick look at the Facebook. So that is Bernard presented that these numbers projected during the meeting, the presentation. So I did not change any of that. The only thing could change was, so right, based on that is a hold. Actually, yeah, Facebook is a hold, not a buy. Based on the SSG that Bernard presented, the projections, that actually is a hold.
Why wouldn't we update the SSG and see what the current situation is?
Yeah, so I don't know what do you want to change? What do you want to change? Sales? Earnings?
I change everything. It gives you the option to update everything.
But based on what? Have you done new research to see if the numbers need to be changed, and changed to what?
No, better investing. If you say update, and it'll ask you, do you want to update the prices or you want to update everything? I say everything. It updates everything.
No, price is already updated. The data is updated. Only when I say the things have not changed is the forecasts. These numbers are our judgments.
Oh. Yes.
So what do you want to change?
So it's a hold unless you change the judgments, and you got to do research before you throw in new numbers to change the judgments.
Right. I think based on, I remember last quarter earnings, Jane recommend to hold. Let me just have a quick look of her reports.
I think what I say is that I recommend it to hold it because Facebook's strategic focus on driving engagement with mobile videos may slow the advertising impression growth. And also the Facebook management itself expect its revenue growth rate will come down as the year progresses. And also the management also expects its full year 2017 payment and other fees revenue will decline as compared to 2016. So these are all from the quarterly report, I believe.
Right.
And also Facebook's only source of revenue, almost only source of revenue is currently advertising.
Yes.
And the growth rate of this is uncertain because Facebook is spending a lot of money on research and development R&D. However, these R&D efforts will materialize in the future. So Haney asked me whether, this is gonna materialize, and I'm sure you will in the future, but in the short term, I don't think it will materialize soon. And management has indicated in the quarterly report that the growth rate will slow this year as the year progresses. So I suggest not to purchase at the time. But I don't know now because I haven't done an SSG now.
Yeah, I think right now price is 171 or something. Yeah, 171. That was Friday's price. Also, okay, this is Facebook. I want to ask you, I meant to send an email to Roy and Matt to copy the club. I'm still interested in REITs. The last time reason why, one of the reasons that I did not feel comfortable is the data for the earning per share, because REITs is using, what do you call that? Operation FFR or something? Matt, do you remember that? They are not supposed to use the earning per share. Can you guys to manually enter the REITs or actual REITs data to replace the earning per share to see what that two companies give us?
For next month?
Yes.
Yeah, I can.
Okay. So because what we want to see the right. Makes sense? So not look the earning per share, but look the, what do you call that? Something operation, I can't remember what's the term for REITs. Do you know what I'm talking about?
I do, but I don't know. I can't recall the name of it, but yeah, right. I know what you're talking about.
FFR or FFD or something called, yeah.
FFO.
FFO. Okay, FFO. What does that stand for?
Funds from operations.
For operations, okay. So use that other than earning per share. So I would like to see again, so which company, so these O and the public storage, which one kind of has better, potential.
Yeah, that's a good idea. We can do that.
Okay. So, all right. So then we're not going to have, Bernard wants to buy more Fleet Court, but is there any, by how much? What's your motion, Bernard?
Okay, well, I would, since you guys are very cautious, I'd buy another 1,000, but I'd also go buy some of this Bank of the Ozarks. I think in the long term, it's going to be fine.
Can you make a specific motion that we can discuss?
Okay, we buy, well, I would first move, we buy 1,000 more of FLT fleet.
It is 1 second the motion. No 1 second the motion, so no 1 second the motion.
Oh, okay.
Motion dies.
Then
okay, go ahead.
I'll make a motion, we buy 1,000 shares of Ozark, Bank of the Ozarks.
Anyone?
I thought we are going to do a SSG before we buy anything or sell anything.
We did one recently. Okay.
Ozark. We have not done Ozark either. Yeah.
But I don't think the motion has been seconded, so I think it dies.
Okay, motion dies.
Yeah, okay.
Sorry, Bernard. Okay. So next month, stock study will be Jane and Barry, and I can help you guys set up the online meeting if you need it.
Okay.
For the education topic, Henny is going to talk about the ETF. Give us some specific picks based on his presentation a few months ago.
Very good.
Yeah, other than that, and I just got email from Faiz. His alarm did not go off. So, did not wake him up because it was 2:30 in the morning. Anyway, so we may give him another chance, and I will email him, see if he wants to do another presentation or something to present. So we will not vote him in today. Yes.
Okay, and next month too, Bernard does the Ozark.
Ozark, right? Yes, Ozark. And then Roy, could you please help him out with the quarter report? Okay, thank you. Anything else?
I have a question.
Go ahead,
yeah,
Jane.
I just wonder, would we allocate a portion of our portfolio money to small cap or growth company without track records of earnings?
I have a recommendation. AAOI. I found from Better Investing, small companies, and that's doing pretty well. They're into fiber, putting fiber out for people to get faster internet.
I'm just wondering, would you consider that turnaround stories, which may not have the straight and parallel, past records, but then it's a really strong story to consider?
Wait, okay, I want to make sure I understand what you're asking. So you're asking if it's a small company who does not have 5 years of history, have enough data? Is that what you say?
No, it has data, but then there's it's turning around, and it may not fit exactly the criteria we have been looking for, like up and straight, parallel, and but then it's a strong story. And I wonder whether our club will allocate a small portion of our money to this type of company if we find it's a very strong story.
I think, well, if it's not straight up parallel, but if a fundamental looks strong, I don't know. You want to say have a good story? What do you mean by story? Like good?
No, it's backing up with the fundamentals.
Right.
I'm not talking perspective comments, but then for myself, I do allocate my money, a small portion of money, to this type of companies for better growth. I'm looking beyond 15. I'm hoping.
But
it's definitely based on fundamentals.
So the company, okay, the graph doesn't look good, but the growth will have a strong growth.
Yes.
But how do we support that? I think
because
we can use the case.
Last quarter, and it's expecting to continue that growth trend. And I don't know if you consider. I mean, if we would consider that, then we can look into companies like that.
So what do you guys think? I think since we are learning, no harm for us to try. What do you think, Roy, Tom, Matt, Jane? Other than Jane,
well,
Bernard.
Yeah, for my 2 cents, I think when we formed the club, it was going to be based on BI principles. We've varied a little bit because this is also for education. A turnaround company would not make for a good SSG, but it might be worth, seeing if there's one company out there that's a good story, and notwithstanding a poor SSG that we think is going to turn around and come back strong, would be maybe worth, trying. And then if it falls flat, we know not to do it with our own portfolios.
Or maybe a new company that isn't very profitable yet, that's selling at a high price, like something like Snap, which seems to be falling apart. But
I thought you were talking about Tesla.
Well, no, Tesla's been out a while.
Turnarounds, the statistics are most turnarounds don't turn around. That's the history. But I want to mention, there's one more coming. I'm kind of an amateur at this, but I did find in Better Investing AAOI, and I did a stock study, and I invested in that, and it's been going up pretty good. It's a very small. It's hard to find small companies, but AAOI is one.
Well, that's something you and I can do in November.
Okay. All right. Very good. Yes. Right. Thanks.
Is it yes or no? I mean, we don't have to look into it, but if it's a yes, then we will look into it next month because I will be doing a stock study.
I guess.
It's all right to find one.
Yeah.
But most of them do work.
There's one company that Henny shared with me. It's an open text, some software company. It's kind of interesting. He said they can look into. I need to dig out the tickers for you. If you what do you think? I don't know. It's if you think it's worth
I
it.
already have something in mind, but it's up to us whether we want to look into this type of company.
Quick turnaround. You know what? It serves education purposes. Why not? Because I would like to see it. What does that mean? The future, you know. Yeah. Sure.
Okay. Okay.
Agree? Rest, sure. Matt? Tom?
Sure.
Yeah. Just for us to learn.
That's fine.
Yeah, that's fine.
Yep.
Okay, great. Okay, so looking forward to it, Jane. And sorry, we went over again the meeting. So the next meeting is October 16th, and I will call the meeting adjourned. Thank you, guys. And I hope you will fill out the survey for us.
Okay, good night, everyone.
Good night. Good night.
Good night, everybody. But
I'm figuring out how do I stop the recording. Oh, geez.